Investors are asking which industry will be the next to be disrupted by AI. The tech sell-off seems to be back on this week. The fear that AI agents could replace entire businesses started to hit Wall Street last week with a steep sell-off in software and data analytics companies, and now it's catching. This week nerves have spread to insurers, logistics and financial services. Joachim Clement is head of strategy at Panmure Liberum. Joachim, how is the market picking and choosing these AI losers?
Well, at the moment, it is very indiscriminate and thinks everything is an AI loser the moment Anthropic or some other AI company puts a new app onto their website. And that has led to some incredible opportunities for longer term investors. I would say some companies have sold off so much that you have a once in a decade buying opportunity.
You think this sell-off is overblown then?
Absolutely, absolutely. To give you a concrete example, Relics, the UK data provider that sells legal and risk data, the only way to justify the current share price is if we assume that it basically will lose all its legal business immediately and never get it back. If you make any normal assumptions, the share price upside from here is 30 to 60%, depending on your assumption. So the markets have sold companies like these off way, way too much.
You're talking about the legal software sector, but on Wall Street we have seen this go much wider. Yesterday it took in logistics companies, freight trafficking, insurance companies. Do you think any of these losses are justified?
No, not at all. I do think that there will be some margin pressures in all of these sectors, whether we're talking about financial services or logistics. But to be perfectly honest, we saw the sell-off in office real estate, for example, during the pandemic because everybody thought nobody would ever have to come back to the office. Now we're seeing a decline in office space providers and office real estate companies because people think that nobody will hire anybody anymore. But in truth, both are way too aggressive as assumptions. As we've seen past the pandemic, people are coming back to the office, and so AI will also not replace many office workers.
Well, the boss of Microsoft's AI operations said this week that all white-collar jobs could be replaced in 12 to 18 months. Of course, he needs to talk up his own product. Are big tech doing this successfully enough to underwrite the enormous investment that they've made in AI?
Well, clearly not. And this is kind of the internal contradiction in the stock market right now. On the one hand, a lot of companies are selling off because everybody fears they might be replaced by AI. But when companies like Amazon or Microsoft announce massive capex into AI, they're selling off because their investor base thinks that these investments can never be made profitable in the long run. So something has to give. And my money is on AI fears being overdone and a lot of these capex not being profitable.
What about the impact on your own industry? Asset managers from Charles Schwab to Morgan Stanley sold off this week on the back of an AI agent that could apparently manage your portfolio. What do you think the impact will be in financial services?
Well, did anybody remember robo-advice from like 10 years ago when we tried to replace human advisors with machines? That was a big flop simply because the core part about financial advice is not so much creating a optimized portfolio. A machine can do that for you, but guiding clients and investors through the ups and downs of markets and providing auxiliary services, that's where the real value add is. And AI still isn't near replacing us there.
How should you position now then? Is it time to buy the dip?
Yes, I would definitely buy the dip in those sectors that have been stamped as AI losers. I think there is, especially for the software companies, a massive upside in the order of 30% or more from current levels.
That was Joachim Clement of Panmure Liberum. Don't forget, you can watch more videos on Reuters.com.